Hello and welcome to this video. So what we are going to be doing today, actually let me go to the monthly chart. So I'm going to be outlining actually the day trading model that I'll be using. So in this model I'll mostly be using the daily chart, the 15 minutes chart, 5 minutes and 3 minutes. So maybe from the daily or the weekly rather. So this is a simple process. You look for a higher time frame PDRA to be hit, which is in this instance I've outlined the daily. Then you look for liquidity to be taken out in the 15 minutes chart during the kill zone sessions. And then you look for a short-term high or low to be broken and leaving an imbalance either in the 15 minutes once it hits that higher time frame and takes out liquidity, in the 5 minutes or 3 minutes. So I'll show you exactly how. So we have a checklist for the setup here. So you want to be looking for the drawn liquidity on the weekly plus daily. Of course you want to focus on the daily, so the weekly will just support the daily. Then you want to be looking for that obvious, actually I've not outlined here, but it's an obvious 1 day PDRA that should be hit. So I think we should outline that is what we mean is the obvious. Obvious should be, I must insist on obvious. Just the one that you see pop out in the chart. That is the one you should be focusing on. So I want to update that and say it is the obvious PDRA. So then after you have that obvious 1 day PDRA, you want to make sure that you're in a session, either London session or New York session. And then you want to see liquidity taken in 15 minutes. Once you take out liquidity and then maybe it's in the direction of the draw, opposing direction. So if it is bullish, you want to see sell side liquidity being taken out. If it is bearish, you want to see buy side liquidity being taken out, obviously. So once you see liquidity being taken out, you scroll down, use the 15, 5 or 3 minutes to look for a short term high or low which is broken depending on the direction, plus fair value gap. And then you will take your entry into the fair value gap, place your stop loss at a logical high or low depending on how the structure looks like. Then you target daily high or low or the drawn liquidity. So a secondary entry can be taken maybe if the fair value gap in the 15 minutes formed, and then you see it coming to retest. So maybe you can check the 3 minutes for the similar framework. Liquidity being taken, then breaking a short-term high or low, then you enter in the fair value gap. Very important, aim for 3R setups. This is very helpful in money management. So let's look at the 1 month chart. So in this instance I've started with the 1 month because we had a drawn liquidity. We have a very small imbalance right here, which is our drawn liquidity, which is we call the CB. So this is a current drawn liquidity. So this is what I'm watching the market to reach into. We had this order block, but it came and traded above. So I'm watching this as the drawn liquidity. So as simple as that, that is the drawn liquidity. You don't even look at this highs first. You just look at the nearest because this is the range. So we hit, actually this is a monthly, this is a 1 month fair value gap. So that is a monthly fair value gap that was hit, and then you see the market responded. So it's just going higher. So in the last say 4 months we've just been, so the reason we want to use monthly and weekly is also because it takes a lot of time for this to change. So you'll be bullish all these months, maybe say 1, 2, 3 months, maybe even the 4th month you'll still be bullish until you hit this level. Then we'll see if it will break above and retest and then continue for this liquidity, or even another draw maybe in between before you're reaching the liquidity. So I think that's all about the monthly. We can go to the weekly. So this is where we want to spend majority of the time every week trying to determine, actually for you to determine the drawn liquidity, you just come to the weekly chart, maybe look at what the market has been doing. So we saw the market came from here, it broke structure here, then it broke structure again right there. So we are seeing the market just continue higher, and we had this imbalance, so it respected that imbalance. Then we have, there's another block here. So as you can see, it's like you're just following the institutional order flow of the market. That is all about actually determining the drawn liquidity on the weekly chart. So we had this order block, it respected that, it left this imbalance. So actually currently what we are watching is for the market to be due towards this order block. This is a 1 week bearish order block. So when it's coming from this one, you want to determine this week what can it do, what is it most likely to do. So this week it's just likely to continue higher, maybe hit this order block, and maybe even come to this imbalance probably, but depending on what the market wants to do. So it may also decide to retrace into this, then continue higher later. So you're just trying to figure out this week, where is the market likely to go based on what it has done last week. That's it. That is your weekly bias. So for instance, when you are here, the market created this order block, retested this order block, and then rejected. So this next week, we want to see, yeah, it had not taken out this liquidity. Imagine it's as simple as that. So you are just looking for this week to take out this liquidity. That was all. And then once it took out the other week, we wanted just to retest that high. Look at that. And that was it. Imagine that it's as simple as that. So, and then once you have that weekly draw, you know that the market is drawing higher, you go to the daily chart. Let me remove this. So you had all this, and then you had this. So the daily chart will now guide you. You'll see if the market will want to continue or it will want to drop, but you stick to what you had chosen as the weekly bias. So let's drop to the daily chart. So in this daily chart, this is where actually we'll get our majority of the bias. This is a lot. So we are now trying to determine the first thing on the checklist, which is the drawn liquidity. So we have determined on the weekly that the market may be expanding higher. So you saw that the market came out of that. So you see how aggressive it can be. So the next day you'll be bullish to take out these highs. So that is the daily bias. We also determine in this day we are in, where is the market likely to go. In this day, once you saw that it hit weekly order block, expanded, you're seeing that this is a drawn liquidity. So this day, this was on Monday 9th January 2023, it was likely to just expand and take out those buy side. Now after that day, you might use maybe now this one as a PDRA, because the weekly was still expanding higher, so you're anticipating just continuation higher, maybe to take out weekly liquidity. So we had that retest, so that is the bias, and then after it took out this one, you see it comes back. This was on Thursday, so this was Wednesday, Tuesday. Thursday it comes back, retests that high as a PDRA, then it continues higher. But now the next week, this is Thursday and then Friday. So the next week you have seen it has left an imbalance, and probably it has taken out liquidity. So you expect the market to come to that imbalance. So this day, you didn't expect much, but once it left the imbalance, this day now Monday, Tuesday, it should come to that imbalance, then continue higher. So we are seeing that Tuesday, Monday it failed to come, Tuesday it came and hit, then Wednesday again it came and took out Tuesday's low, and then it started going higher again. So this was Thursday, Friday, So actually you're seeing that Thursday and Friday they use this order block. Okay, actually Friday. It was more of the consequent. Use the consequent of the, so this becomes our PD array because it was taken out here. Then you start targeting now the size because the weekly is still expanding higher. So then we have the consequent of the week, but even before that we had this imbalance. It left here. So this was Tuesday, this is Monday, leaves an imbalance. Tuesday it comes and retests. Then Wednesday it should resume higher, and Thursday, Friday probably should continue higher. So that's how you determine the drawn liquidity on the daily chart. So the weekly is our draw, the daily will show us if it wants. So the daily will have many PD arrays. So you outline, so this is the example we're going to use. The example is that one. We can also outline this one down here so that you can see another good example of what we're talking about. So this is a daily BC, let's call it BC. Very important, sensitivity to time. So narrative should also be at the back of your mind. Monday, Tuesday, Wednesday, they tend to form majority of the time the high or low of the week. And then daily, you want to focus on London session, you want to focus on the Asian session, how it behaves. So actually I had, I think from Palm, I had, if we are bullish, I think this is how she drew. If you're bullish, maybe see Asian, maybe creating a range, and you're bullish. So you want maybe the market to come higher, take out Asian highs, then come lower to hit PD array, then maybe retest, come back to hit it, and then you should see the market go higher. So this is actually the Asian. So this is the Asian range. So probably you have, so this is just an example. So you probably have something of the sort in your charts. Then you see you have a PD array down here. So this is most probably daily PD array. So remember you're bullish. So you want to see the Asian market take out highs. This is London, so maybe this could be midnight open. Maybe around there. So this is midnight open. Let's draw midnight open. So maybe this is midnight open. Let's do midnight open. Ouch. So okay, let's just call it midnight open. So you have maybe midnight open, Asian comes, maybe London open comes up, takes out this high, then drops to hit that daily PD array. Then from that daily PD array you get the setup that we are seeking actually. And then you get, now it takes out these highs and continues. So this could be the New York. Actually this is what is called New York open retracement. Potentially. So it depends on how the structure looks like. So this is actually it's a daily profile. You can call it the daily profile. Typical. Don't occur like this all the time, but at least this framework of how you should expect. So this manipulation is what you should expect. So you're bullish, it comes, hits that PD array after I'm manipulating here. So this is Judas swing actually. Then this is the move of the day. So that is how you should envision the daily, or rather the day intraday. Okay, so let's move on. Let's move on to the next thing. So the next thing, we have already determined daily PDRs that are obvious, can clearly see them. So we also have these highs here, but we're not looking. Okay, maybe if we get down there, we'll look at them. Visibility is all over, so that's good. So we look at this high once it was taken out. So let's go to the next thing, which is the session and liquidity taken during the session, or rather taken in 15 minutes. So let's drop to 15 minutes immediately. So I don't want to go into, maybe you can just check the one now, huh? What I've found, it is very good for checking intra-week liquidity. For instance, this week that we hit, so we have these 2 weeks, so we have this period that it took out this high. So we had this. So actually this is the setup I'm talking about, and then here this is also another setup here, targeting these highs. It has not really taken out the high yet, but essentially this is what we're talking about. I think I missed this, but let's look at the example that it's obvious. So let's just look at those 2 examples. So you can see how it takes out liquidity for Monday. So if you go to the 15 minutes, you'll find more information here. Even here, you're seeing actually it took out liquidity for Friday while entering into this imbalance. Then 15 minutes will give you more information. Then it transfers this liquidity and then collapses again. So like that. So I've seen actually one eye is just good for checking intra-week liquidity and maybe day-to-day liquidity, like maybe previous day liquidity. So I don't like using it much for any type of framework or even framing a setup. So that's all about the one now. Let's drop to the 15 minutes. So in the 15 minutes, this is where majority of the setups I want to start hunting for. So number one, you're in session. So let's put sessions. And then let's put Asian so that you can see what we are talking about. Oh yeah, I already outlined this setup. So the thing in the checklists that we want to look for. So let's look at this setup first. So this was a Tuesday. So Monday had dropped. So you can see actually Monday just opened and dropped. Then it went for premium. Then you saw it collapse again. But we are interested in this PDRA from the daily. So the reason it was doing all this is just to create liquidity. You can see it created a lot of liquidity down here, up here, just to come later and take them out. So don't be concerned with anything in between. You want to focus on the PDRA from the daily chart. That's what I've learned to work, and that's what we should stick with. So let's dig in. So the first thing you see, when the market now comes and hits this PDRA in the 15 minutes. So this is a 15 minutes chart. So the daily PDRA has been hit. And then this is the Asian session. So sometimes it occurs like this. So if you find liquidity has been taken out and then there's a break in structure. This is London. Already you're seeing a break in structure. The market is telling you that now it's ready to move. So sometimes you'll get Asian taking out the liquidity and then London just starting the move. So this is just an example of how that occurs. So session is London or New York. So we are looking at London. So we had an early entry this time, but it's not always that. Like today actually I took an entry early and then I got punished because of not focusing on the higher time frame. Actually that's the only reason. Not focusing on the daily chart. PDRAs. I was focusing on 4 hours, so forget about 4 hours. So liquidity is taken in 15 minutes. You're seeing these sell stops have been taken out. Good. So session is London Open or New York. So you're in London Open. Scroll through 15, 5 and 3 minutes. 4. What are you looking for? Short-term high or low broken plus fair value gap being left open. So even in the 15 minutes, you'll find a short-term high. So the market actually took out liquidity. Then it created this short-term high, then started dropping, then took it out, leaving an imbalance. That is it. That is your setup. So this is 130. The entry came in at 130. That was it. So you target the nearest liquidity first, which was this one. Then you can target internal range liquidity, and finally the final target was that daily high from Tuesday. That is it. Stop loss, we place it just below here because these are order blocks and we have an imbalance. So if you are using 15 minutes to enter, you can probably enter there. The stop should be about 16 pips. So if we use this tool, let's see how much potential you had. So 16 pips. So you're focusing on this low, which is the order block, or you can place just above that because you don't want it to dig so much deeper. But we have around 15 pips. So the first target was already at 22 pips. Target number 2, 54 pips. Look at that. This is how simple it is. And then final target 87. So maybe at this point you might have taken majority, and then this could be a runner. So we are seeing a runner of about, look at that, 32 pips runner. A runner of 32 pips. My goodness. It's just amazing. So that is an entry based on 15 minutes. So let's scroll down maybe to 5 or 3 and see how we could have. So you see I've entered in the fair value gap. Stop loss just below here. Then target daily high or low and internal range. So you can just use the nearest liquidity, internal range, then the final target. So let's go in here. This is 18th January. Let's go into the 5 minutes chart. 18th January. So I don't know if it will give me that information. Yes, perfect. I think let me disable the kill zones. But we're seeing something here. We're seeing something here. So this was our entry, but we're not seeing anything clear here. I think the 3 minutes will provide more information. But as you can see, this breaking structure here, the imbalance. Okay, maybe the 15 minutes was the most clear. Let's look at 3 minutes during the same time. Perfect. This is an entry right there. So we had this 15 minutes breaking structure, but once it came here, I don't know if you can see. Yes, perfect. So once it hit, so this is where I was saying this is a secondary entry, and make sure you're aiming for 3R setups minimum. So this was 6R once if you use the 15 minutes entry. Oh, is it the 15 or the 3? I think the 3. And replace your stop here. Get 6R. So here is the entry. It entered into that 15 minutes imbalance, took out its liquidity, then expanded higher, breaking structure, breaking a short-term high, leaving an imbalance. Boom, entry. Then you target the 15 minutes targets now. That's it. That is it. So let's go back to 15 minutes chart. Let's look at the next entry. So we have this entry up here, so we'll figure out how one might have entered there. So remember that this is a daily high broken. Oh, not broken, sorry, poked. So this is also a PDRA of the daily chart. So daily highs actually are also very crucial because they tend to form very good setups. So maybe before we continue, maybe you can check that whatever I was telling you in the Asian. I don't know if you can see it. Maybe it's something to backtest. Yeah, perfect. Look at this. the market opened, it created Asian range. It wanted to go up, but before going up, actually there's a PDRA here that was hit. I didn't outline, but let's assume you have seen the PDRA. I think it was a daily order block. So imagine the market going higher, 3 AM, then dropping into New York. So this is actually a New York reversal. So it went higher, took out this buy side, then came lower. By the time it hit, it was New York, so that's a New York reversal. But typically you might find this maybe here in London, becomes a Judas swing, then it continues higher. Yep, so that is it. What have I not spoken about? Also, this is another example. Actually, in this instance, 15 minutes just took out the high, then created this order block. So maybe I'll outline that order block. It's probably a breaking structure in the lower time frame. So this is a 15 minutes bearish order block. So we'll go deep and see what was going on there. So maybe you can outline also these. Maybe just those ones. Let's see what was going on in 18th. This is around 10. So 5 minutes fast. So once we took out that liquidity, what was happening there? Perfect. So number one, you want to see short-term high or low broken. So I'm seeing this short-term low, but I'm not seeing any imbalance. After the short-term low, you should be seeing an imbalance. But I'm not seeing any imbalance. I'm just saying the market came back and retested that order block. Even in this instance. Let's drop to the 3 minutes and see if we can find an imbalance here. So that is 18th. So after we took out, oh, perfect. So I think this order block, I can move it. It's not relevant to what I want to show. What I wanted to show you guys, oh, it's just me, is this. Oh my goodness, how sweet. Oh, this is a 3 minutes. Look at this. This is your entry, 9:42. So it broke structure at 9:36, then came back. So that is it. That is it, guys. Oh, that is it, my guy. So let's see the potential. If you enter there, okay, maybe I do this. So if you enter there, oh, let's take a sell position. So if you enter around there, oh, that's okay. Then your stop comes maybe above the high. You can just decide to put above the high. Then it means your first targets, just target liquidity. Look at that, 3.79 R. That is already 61 pips. Oh, the stop was 16. Huh? Oh, okay. But remember, the market was dropping. It even dropped up to 82. It is 5R. I thought it was coming here, but there's another PDRA here in the daily chart. So you have to be very cautious about PDRAs in the daily chart. So that was it. I don't know if the 1 minute can give me maybe so that you can check it out. You can see how the 15 minutes order block was retested, but it spiked into that imbalance. Very interesting. Oh yeah, it can give me. That is cool. So this is how the 1 minute looks like in that area. I don't really like the 1 minute so much, but we see it spiking. I prefer to use 3 and 5. You also have another imbalance. I could have entered here and it could have been a very huge risk, but I prefer 5 minutes and 3 minutes. So let's go back to 15 minutes and look at a final example. So we have this example. So you can see 15 minutes comes. Look at this. This is Monday. So Friday was going high this previous week. Then we hit something there. Then it came down, left this liquidity, then started going up, then came down again to hit and take out this liquidity. So this was Tuesday. And then it continued. Probably it will continue higher from there. So much manipulation. Actually, I took this entry here. This is another good entry. It hit a daily order block. High of the order block. So this imbalance, we hit it. This was at 9:45. So this was quite late. So you want to see the market respond immediately, go higher because of the time. So time is a very crucial factor. So looking at the time, we had London here, and then just went up. I think it hit a 4-hour order block. Then that order block was used to retrace into this daily. So that's why the 4-hour, it's not very. I've used it a couple of times and I've not found myself to be very sensitive to it. Actually, it has cost me to get some losing trades. So I've now opted to just focus on the daily chart. So once we hit, this liquidity has been taken out. So in the 15 minutes, we are seeing this imbalance here. So we are seeing that there's an imbalance there. But after taking out this short-term high and this one, it left this imbalance. But now we have to drop down to the 5 minutes first. Let's use the 5 minutes first. This was yesterday. So now once it took out that liquidity, where is the short-term? So short-term highs are still these ones. So it's still the same area. Oh, there's this one. Maybe if you considered this as a short-term high, you have this one. But I think lower time frame now, maybe 3. Let's go to 3. It will give us more information of what was going on there. Oh yeah. So once we took out that liquidity, actually we have. So you knew the market may be coming for this high and take out maybe 15 minutes break. So the first thing you want to look, short-term high broken, which is this one, the 3 minutes. So 1 minute will give us even more details. So we have this one broken, leaving an imbalance, came back to retest. Look, 10:18. We tested that area and then expanded higher. So we didn't need to wait for this one. But if you did, it was a bit choppy. Because I think of time, time was just over. After 12, it just becomes choppy. So maybe, and you see, it came for these highs. Actually took out those highs. It was in premium, came to discount, then beautiful. So let's go to 1 minute so that you can see more information. Actually, I like the 1 minute on this, in this instance, not always, just in this instance. Look. This is why I was saying I like the 1 minute here. Let's disable that. Look at that entry. Beautiful entry. That is your entry right there. After breaking this short-term high, imbalance, and you're done. You can see even the potential. So stop was a bit long, just like 11. Then you're aiming probably for this highs first. This is 11:30, so probably right here, 2.99, 34.7. But we knew it may come for these highs. That is 51, that is 4.45. It came actually overnight, took them out. And that is your setup. So I can show you maybe a final setup that occurred today that I took. I think I'm happy about this one. So let me show you. So initially I had taken an entry here which was very premium after I took out this highs, which was not very ideal. There's no higher time frame PDRA here. So I needed to watch for that daily order block. Let me show you the order block. So in this instance, we had already come from this imbalance. So the order block was this one. So I used the high. Should be something obvious, something simple. Don't overcomplicate it. So the high was retested right there. So let's go to 15 minutes. Margin. This is it. Oh, I took out liquidity right here. So this was the low that was taken out just as the PDRA. So you just want to find liquidity in the PDRA or near the PDRA. And then voila, short-term high broken, imbalance left, entry. This was the entry. Actually I took this entry. Then you target these highs. Okay, you have this one. This is 21. Then you have this one. So I actually booked 41 pips. 41 pips. So if you can check the R multiple, maybe let's say the entry was about there. Then my stop I initially had placed somewhere there. I think I was aiming for this order block below it. So we had 1.5, 2.96. Not very nice. Actually, that's a very nice, very nice. I know by the grace of God, I am able. We are able. Mimi na Pamela tumeweza. In Jesus' mighty name. So that is all about this model, and that is how you should trade it. Oh, let's look at the secondary entry right here. I think I've not outlined another example of a secondary entry. You want to be targeting daily highs and lows, just to know where the liquidity has been left. So let's look at this imbalance on a lower time frame. I think that will be the final. If I go to sleep, because I'm fasting and praying, so don't want to be overstaying my welcome here. So actually what I saw, this was the entry 855, but if you didn't partake, maybe you just stop here. You can wait for this break in market structure, or breaking short-term low, short-term high, sorry. We have that imbalance in the 5 minutes. Look at how beautiful that is. We have that imbalance. Then you just take an entry there. You stop probably below that low. This is 11 pips. And then you aim for the highs. So we took right there. That is 3.36. Even much better than my end, which is 2.96. But still okay. Let's look at 3 minutes, how it looks like. Much better, much more clear. Look at how so beautiful. Look at that end. Break, imbalance. That is all you need. And the higher time frame plus liquidity taken in the 15 minutes. 1 minute finally. We have just thinking that maybe I'll be back testing using videos, mostly setups. There's a lot of work to annotate all those setups. We'll just be annotating the examples and publishing on YouTube. That's what I'm thinking. I'll try it out and see how it works. So just the setup examples and maybe the backtesting aspect. I don't know about the detailed examples, but we'll see how it goes. No pressure. So this is 1 minute. That's the entry after breaking the structure here. So I think that's it. I'm done, so I don't want to overdo anything. So that's That is all about that model.